I've not looked at seed policy in Nigeria necessarily, but I have looked at it across the continent, taking some examples from Asia. And with seed policy, I think one of the big challenges is that we've been very slow to adopt what works from other countries. And it's actually very similar to the CBN challenge, where you have a consumer protection sort of angle and perhaps a need for innovation as well, and how do the two conflict? So with seed policy, what you're concerned about, for example, is having seeds come into your country that are marketed one way but actually don't perform. So you tell somebody it's a high-yielding variety of maize or soy or cassava, whatever it might be, but actually the product doesn't work in Nigeria, in the climate, in the agroecological zone. So there need to be controls in terms of what's coming into the market. But let's say that this product works in Benin or Niger, Cameroon or Togo, right nearby us, in the same agroecological zones with their 7-year process for certification. Does it mean we have to go through another 7-year process for certification when it comes to Nigeria? Yes or no? So that's really where the debate is, where the process to actually get a variety of a seed certified in the country is quite a lengthy process. And it can mean that we're missing out from those innovations that could come in and support higher incomes or higher yields, which can then lead to higher incomes for smallholder farmers and even for the medium and large scale farmers. I'm not saying it automatically works, but I think there needs to be a revisiting of the process to allow that seed to enter the country. And especially if it's ECOWAS. So if we have a common ECOWAS policy on what are the standards for reviewing seed, whether it's how many plots you need to test the seed on, in how many different zones, for how many years, this kind of thing. If it's already gone through that approval process in a close by country with the same agroecological zones, then that variety should likely have a more expedited process in Nigeria than not. And one of the challenges we're seeing is that when seed companies are trying to bring their seed in from other countries, they're getting significant challenges to get the seed certified in Nigeria and signed off to actually replicate and produce it here. So that's one. I think the second one is that there have been different bans on things, and I won't get into the whole GMO debate and all this kind of stuff. There have been bans on different types of seeds as well, which can of course then affect the ability for smallholder farmers to access those seeds, and it can also put pressure on people to sell seeds and market seeds that are not doing what they say they're doing. So people can buy seed in the market that's actually not tested, that's not proven to have either the higher yield or lower pest incidence or sort of deal with drought, etc. I know there's a lot of research on the different varieties, but I don't know what's happening with the approval process. Where I worked on it was in Ethiopia, actually, where they were sort of looking at how do you streamline and how do you support some of the existing seed enterprises to have higher quality and sort of be able to deliver what farmers need. We had a debate about this actually internally some years back, and I think one, there's a lot of literature out there that is not actually scientific literature that has affected a lot of the policies across Africa. So I think there probably needs to be a revisiting of the actual scientific literature on GMO. I think that's one. Two is there are so many other issues. And then three is it's not just about the seeds, it's about the chemicals and fertilizers as well. So we can't just look at one without the other. So until we are increasing or further increasing our production capabilities for fertilizer and chemicals in the continent, that can help to reduce the cost of those things versus, I mean, coming from Morocco hopefully is faster and less expensive than coming from India or Sweden or wherever else. I think all of those things need to be addressed. I think it needs to be in the suite of options that we look at for increasing yields in Africa, but it isn't necessarily a silver bullet answer to why we don't have high yields and how we can improve high yields in the continent. So I think it needs to be on the table, but there's so much to be done, even just post-harvest waste and loss. So if you think 50% of the products that you're actually growing are going bad, across different value chains, then increasing the yield, you're still going to have this 50% waste.
Exactly.
So perhaps you should look at that first or in tandem. Actually, I think the World Bank and IFC have looked at crop insurance in Nigeria maybe 4 or 5 years ago, and they're trying to understand, where are those gaps and why is crop insurance not necessarily fully taking up across the country. So I think one is that it's helpful that we have NIC, the National Agricultural Insurance Corporation, I believe it's called, because any bank loan in agriculture, it's sort of built into the cost of the loan that they buy a policy. So I think that is already helpful, but that's only for those farmers that are accessing bank loans. And as we know, bank lending to farmers is a very small sort of amount of the financing that they're accessing. So in a way, it's similar to this issue of how do you get a loan to a farmer? It's the same question, how do you get an insurance product to a farmer? So you see a lot of innovations happening in Ghana, in Kenya, Tanzania around crop insurance for smallholder farmers. A large part of that has to do with mobile penetration, mobile literacy, and that's one of the challenges in Nigeria. So do smallholder farmers have access to mobile phones, and can they actually sort of use mobile as a way to interact with whatever the insurer is? So you might, for example, what they've done, there's some pilots in Kenya where you can when you buy your seed, the insurance is built in. So you scratch off a code similar to airtime, you scratch the thing and you enter a code in your phone just to say you've registered now for your agricultural insurance. And if something happens at the farm level, you can actually file a claim for that. So I think that's one piece of it, is just how do you actually get to the farmers? We've seen mobile technology be an important piece of that in other countries. We'll see how this works in Nigeria given some of the rural connectivity challenges that we have. Well, connectivity challenges and rural access and connectivity challenges that we have. And then the other one is the data as well. So in other countries, for example, let's say in Ethiopia or in Kenya, they've done seed and soil mappings across the country. So we know what kind of soil we're actually dealing with. So we know what kind of seed makes sense for that soil. We know what kind of fertilizer mix makes sense for that soil. And it helps de-risk a bit the process of giving an agricultural insurance product or a lending product to a farmer. So I think that's one, is the level of information we have at the level of the smallholder farm is quite poor in Nigeria. And so there needs to be a remapping of the soils and then an understanding of what seeds, what technology actually makes sense to use there. And then the satellite data that they're using in East Africa can also be used here if we have access to appropriate imagery. So what they can do in Kenya is they can actually see from the sky, this community, it's very clear that they have had a total crop loss event this year, whether it was due to a drought, whether it was due to a flood, or who knows, whatever other sort of natural act or a pest or whatever it was. But you can actually see from the satellite, these farms are completely wasted. There's nothing that's going to come out, and we can already issue the payment through your mobile phone and through your mobile payment because we've seen that there's an issue. Whereas here, there's not necessarily that same level of data being used for payment or for sort of reimbursement through an insurance product. There's been some discussion about drone technology and how that can help. Of course, there's some question about the regulation around that as well. So I think it can come, but a lot of those pieces linked to finance are very similar on the insurance side. How do you get an insurance product at the small scale level? How do you get a pool that makes sense from a credit risk, insurance risk perspective that you can actually insure? There is, but I think it has to be that total value chain solution. So there's one, I don't know if you've spoken with them, there's one organization, Babangona, who's been quite active in northern central Nigeria and looking to expand across the country, where they're providing the inputs, they're providing sort of tractor technology, they're providing access to the market, and of course looking at crop insurance as well. So I think these kinds of models in East Africa, 1 Acre Fund has been doing something very similar. They're looking at Nigeria, Ghana, and a few other countries in West Africa where they're really a total value chain solution, working with smallholder farmers, but also providing that access to the market. where you have that aggregation, if you will, I think it makes it a lot easier for an investor to say, okay, there's a very clear case here. But I'd say to start afresh, you need to have perhaps some either incentive or something for those private insurers to come into the market. Kenya is a very different case, I would say, in part, frankly, because of colonialism. You had very deep involvement of farmers from other countries like the UK, for example, who actually started large farms in the country, and then, of course, advocated for market access and other things for their own produce. So I think that's one. The other thing is that the colonial sort of administrators also set up a number of these agricultural development boards for different crops to support things like value chain development, like market access, etc. So in dairy, for example, you have, I think, either the oldest in the world or definitely oldest in Africa, the semen bank for dairy is in Kenya, because this was set up, many years ago by the colonial sort of powers that were to support dairy development in the country. And you have very similar things that you had in tea in Kenya and coffee. Now you'll see it in horticulture, etc., but quite organized boards focused on agricultural development. I think that was their foundation in a way. Of course, things have evolved from those days, but here I don't think we have had continued that same level of organization in terms of market information, in terms of market access, etc. So I think that's one. I think two is we haven't had the same sort of funded cooperative structure that they have in Kenya. So there's not been banks really looking at funding cooperatives. So you actually have a bank, I believe it's called Co-op Bank, Cooperative Bank. In Kenya you have Juhudi Kilimo, which is very much an agricultural focused bank in Kenya. You have Equity Bank, as I said, started out of these agricultural cooperatives outside of Nairobi. So you have a number of those examples of really local banks that focus on farmers, that focus on agriculture. And I think that's an important piece of it, finding the right financial partners and bringing together some of the other elements of the value chain. I just haven't seen that kind of, I don't want to say grassroots, but sort of almost local advocacy, local level support. Yeah.